Boom! Just like that, we are live. Sorry, scaring people here in the office here in Benzinga HQ. But that's okay. It's Thursday. We opened higher this morning. Haven't really checked the market since then. I know we came down a little bit. Looks like we're still in the green on the Qs. Let's check the SPY. Oh, wow. SPY's doing a lot better than Qs today. So I guess tech week today. But continuing that strength coming off yesterday, of course, we had just robust strength throughout the market. Following the CPI print that was lower than expected. And now the question is for a lot of people, and I was talking about this yesterday with Jason Krutsky, is it's like a lot of people may have not been involved in this rally. I mean, at this point, the Qs are up 20% from its recent low in June. So if you want to say the Qs are in a bull market, you can. It's up 20% from a recent low. People might have different definitions of bull and bear markets, but that is certainly one out there. So I saw people on Twitter mad that some people were saying that NASDAQ's in a bull market, but it's like the same thing with, the recession, GDP. It's like, hey, sometimes the definition, the core definition of something, right? If a bull market means you're up 20% from a recent low, right? A bull market doesn't mean you have to go up 20% from the previous highs, just from the lows. So NASDAQ in a bull market, a lot of people haven't been involved in this rally because there's been so much going on, so many kind of bearish headlines, whether it's about, inflation, whether it's about, the situation, Russia, Ukraine, China, you name it. There's been a lot of bearish headlines that's been scaring off investors. And, even as the markets were dipping through April, through May, what was, Warren Buffett, he was a net buyer last quarter of stocks. So when Warren Buffett's a net buyer, when the market's down 20%, and then you see it to start coming back, things like that, it's like, okay, maybe we can get a little bullish here. But yesterday, what I was talking about with Jason Krutsky from TrendSpider was sometimes you got to envision what would bring max pain to retail investors. Well, maybe that's, finally getting people bought back in, FOMO buying right now, and then the market dips from there. So I'm not saying, we're out of the woods. We're not going to see another market dip. I would say I'm more bullish today than I was a few weeks ago. Of course, sentiment, follows price a lot of the time, most of the time. Helene Meisler's a pinned tweet, getting a lot of action as always. Like Netflix, like take something for Netflix, for example. This thing, and I'll pull up this chart in a sec. I know we got to run the intro. We've got a couple other things we're going to do today, but Netflix, I'm just checking out right now. I mean, from its highs in October 2021 to around its lows, down 75%. So that's a $350 billion company getting, $300 billion of its value wiped out. That was just math I did in my head. I don't think that's actually right. But anyway, my point was, when Netflix was down at 175, just going in a straight down line, down 75%, I wasn't really looking into buying it. It was just going straight down, right? You always hear, don't catch a falling knife, whatever. That was at 175. It's at 245 now. Now it's looking a little more attractive to me because the sentiment's going to change price. Nothing's changed with the business, right? But now the stock's up from 180 to 245, so that's telling me, oh, people are buying this down here. People don't mind buying this. Maybe I should buy some. It's in an uptrend. So of course, that famous Warren Buffett quote, the cliche, gets passed around, maybe even too much. Buy when others are fearful. If we went back and could go back in time, maybe we would be buying more when others were so fearful a couple months ago. But like I said, I'm not saying I think we're completely out of the woods yet. I wouldn't be surprised to see, some sort of little sell-off correction. But overall, I mean, take July for instance, and we can talk about, the inflation debate happening on Twitter, and some people are mad that Brandon said that we had 0% inflation yesterday. We'll talk about that. We'll get into that after the intro. But just taking July, for example, adding 500,000 jobs, you had wage growth, and prices didn't increase at all. If that's not bullish to you, like if you're gonna come here and tell me we're in a recession while we're adding 500,000 jobs and wages are growing and prices are falling. I mean, I struggle to see, the bearish. Well, actually, even on CNBC, we've been talking about how bad inflation is for a year, and now we've already gotten people talking about how deflation can be a problem, right? Because if you think about it, if Apple's charging $1,500 for every MacBook they sell, and they sell 100,000 MacBooks, and their earnings are based off that, and then the next quarter they bring that price down from $1,500 to $1,400, their earnings are going to be lower. And what happens when you have companies that report lower earnings than previous quarters? Most times the stock goes down. So they were talking about on CNBC how deflation, can lead to an earnings crush and actually be bad for stocks, right? Because when you have that steady 2% inflation that the Fed's looking for, that's coupled with economic growth, it comes with it. So, I mean, look, we're not going to know if inflation's peaked. I don't have a crystal ball. From all the data we can see, it looks like things are heading in the right direction, right? We had producer price, the PPI came in the first drop in 2 years. So wholesale inflation fell 0.5% in July, and another sign that price increases are slowing. So again, you can be bearish here, certainly. And by all means, if you think the market's going down or you think we have no business being up 20% right now, you have complete freedom to go out and short the market. I'm just saying right now, I would not be short. I would not be short right now. No chance. I'll rephrase that, or I'll clarify. I would not be short U.S. equities. If you want to put some sort of short on a European or Asia trade, sure. I don't really follow those markets as much. I know there's some more, I think some bigger problems in Europe right now, especially in the energy sense. And of course, those problems in Europe could lead to problems here in the U.S. economically. But I mean, it doesn't mean it has to be, right? It could also be the opposite, where if European equities are lagging, if European companies aren't doing as well, global investors put more money into the U.S. because they're showing an advantage, a comparative advantage, making U.S. equity stocks go up even more. So it really comes down to do you think the problems in Europe, do you think the problems in Asia, do you think the problems here are going to lead to some sort of global wide recession? I don't know. Sorry, catching up on the chat for the first time. Lord Byron, what up? Nicholas Brown, what up? Nick, I got your message on Twitter. Sorry for not responding. We've got a pretty busy show with guests today. I will say toward the back half of the show, around 12:45, 12:50, we may have 10 or 15 minutes if you want to hop on. Said you loved your comment to Joe yesterday. Yeah, I'll pull that up. It was silly. I don't Joe, so if you guys also Nick, I saw your comment to Joe on Twitter yesterday that someone was proud that he had followed them, and you said that he had followed you and then unfollowed you at some point. I'm not gonna try to defend it because I don't know what happened there. I've had the situation before where I've been following people on Twitter and then I see their profile pop up and then I'm not following them all of a sudden. I know that's been an issue with Twitter before. I'd be shocked if Joe went out of his way to unfollow you. You're incredible, Nick. So I wouldn't try to take that personally. And like I said, I mean, yeah, it's happened to me before too. I thought you were going golfing. No, Shelly, I said next Wednesday. Next Wednesday, where there will be no show, I will be golfing. Well, maybe we'll do a little, hey, T, can we do a live show from the golf course? A little live segment? He's nodding his head. I don't know if he's nodding his head to me, though. Oh, sorry. See, I'm being a bad show host, explaining something without giving context. Joe Wiesenthal from Bloomberg, who is one of my favorite people in financial media. He's kind of a troll on Twitter. He's very sarcastic, very facetious, 99% of the time. Just next Wednesday, literally just next Wednesday. There also will probably be some days towards September. We've got some conferences and whatnot. But we'll figure it out. But yeah, Joe's a troll on Twitter. I'll share my tweet on there. I actually meant to send it to Spencer. Ooh, you know what we should do one day on the show? We should just call Spencer out of the blue. All right, puts on AB putts. That's actually, putts are not the worst part of my game. Not the best part, but not the worst part. By far, the worst part of my game are my tee shots. Have not been able to hit a drive all summer. But when I do, I can hit it well. I can hit it far when it happens. No, I'm not saying it didn't happen, Nicholas. I'm just saying it might not be intentional. It might, like, that's happened to me before on Twitter where I'm saying I've been following someone, didn't unfollow them, but somehow I wasn't following them months later, you know? And, like, I would just, because you don't know, right, Nick? Like, you don't know for sure that he saw a tweet of yours and didn't like and unfollowed you. He, you know, you don't know that. That might be like where you go, that you know, you might jump to that conclusion. I would if I were you. I'd be like, God, what did I do to make him unfollow you? But you don't know that. It could have been not that at all. So I just wouldn't worry about it. All right. How do we want to prank? Can you still do the thing? There used to be a website when I was like 13. OP, what do you mean? Can you shed some more light on that? There's no, I don't think Bloomberg's lying about anything. Maybe I don't know. I haven't heard anything about that. Shelly. Is there still, I know there's star 67. I don't get that. I don't really unfollow people. A lot of people have been unfollowing me on Instagram because I don't post on there, which I can't really get mad at, right? Because it's like, if I haven't posted on Instagram in 3 years and you unfollow me, like, how can I get mad at that, right? I'm not offering you anything as a follow. Spencer and occasional various mystery. How would mystery guests work? Are you talking about like Investors Stallone? No. I know star 67, but I was gonna say, or is it star 69? No, we had 569 Dine, which was like Uber Eats before Uber Eats. You could just call this number, and they would bring you food. No, there was a website when I was a kid that you could like call someone from someone else's number. Like I could put in AT's number and call Rohan from AT's number. You know, I don't know if you can still do that because that seems like it wouldn't be kosher, you know, but if we can, then maybe what I'll do is I'll call Spencer from like Raz's phone or something, and that way he won't know it's me. Because if I call Spencer right now from my phone, he's gonna know, oh, it's 11:40 a.m. Eastern, Aaron's live, he's trying to get me live. Yeah, Nick, for sure. I think our last scheduled guest is at 12:15. That's Rob Roy. He'll probably be done around 12:45. If you got some things we want to talk about then, let's do it. All right, y'all. This was a long-winded intro. Let's roll that intro and get the show started.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a breaking news.
Alrighty. Let's start. Let's pull up my Benzinga Pro. And then, as always, let me know in the chat what stocks you guys are watching. Y'all watching NVTA? What is your guess for the earnings tonight? We'll go through some earnings too. I hold Rivian stock in my Roth IRA. Let me check it right now, actually, because this has been one of my good good trades recently. I mean, Rivian's one of those companies that right now, like in this environment, probably not going to report like any blowout earnings, right? But I don't know. Like, I don't know if I'd want to go shorted into earnings too, because the bar's already probably pretty low. And if they say, yeah, we didn't make much money, but next quarter we're going to produce more cars than we initially thought, or something like that, the stock could freaking rip. So I don't know. I mean, if you're going to buy it or sell it into earnings, I don't know. It's a lottery ticket. Like, I have no clue. If I had to guess, I don't really see how they would report a great quarter, but like I said, it would still scare me on the potential guidance. Rivian right now. Let's see. I'm pulling up my Roth on my phone. We've got let's see. Average price was $27. We're at 39 right now, up 43% on this. Let me see if I can see when I bought it. I also called it out on the show when I bought it too. I bought it since I bought it May 18th. So right here is when I bought it. Right here. So when I bought it, actually one of the reasons that I bought it is because its market cap was like scary close to its cash on hand. I was like, wait, you're telling me this is trading at an $18 billion market cap and the company has $16 billion on hand? Like, obviously it's still burning a lot of cash. Like, that's what new growing companies do. But like at that point, someone could buy them out just for their cash on their balance sheet, right? I don't know. I mean, they would have debt too. So I don't know. I mean, it's been a good trade for me so far. Array's been good for me. Array's been really freaking good for me, actually. Well, it's down 9% today. But I bought Array here around the same time, actually, May 18th maybe. So this thing's just been on a tear. So what Array does, and we talked about from the chart perspective, the rounding bottom we had here, and it's not even the first rounding bottom we've had on Array. We had this one too, where it kind of got that consolidation pattern, actually dipped lower off there, but then started ripping higher, filled that gap, kind of similar to what we're seeing now, a little bit different, but you still see those two patterns. What Array does is they do the technology to optimize what's it called? Solar panels. So, like a solar panel should always be facing the sun. Array has the technology and the patents to do that technology to make sure that the solar panels are always facing the sun. I believe like they're the only one that has that technology. So at the end of the day, pretty much like every solar panel company has to use Array, and they have government contracts and stuff too. So if you look at their financials and income statement, they have pretty consistent quarters because they have these government contracts. So I liked Array. I'm not going to say buy it up here because it's at $21 when I bought it at like under 10. But I do think, I mean, this thing got up to $55 when clean energy was real hot. So, we do have some positive catalysts going forward between different bills and whatnot. So I don't mind Array even here, like long term. Like you always hear that from different investors, like add to your winners. Maybe Array is one that I add to. But right now, I'm just kind of, those have been good trades. Production is what will matter if for Rivian earnings. Yep. Exactly. That's why I think the company's too like early stage to really care that much about its, revenue or anything like that. Like you're going to want, just, okay, we're doing well. We're producing cars. Things are on schedule. Sorry guys, I'm sending Steve, our first guest, the links for the show. I thought I already had. Alrighty, y'all. What stocks are you guys watching in the chat? You guys playing NVTA? Oh yeah, thanks, Lord. Sorry, that's bad. Bad hosting job by me. Ticker ARRY. Again, I'm not saying go out and buy this. This thing's great because I've gotten lucky. I'm already up like 80% on it from when I bought it a couple months ago, right? This thing, it is up. Let me see. This thing is up more than 240% from its lows since May 12th. So like, I don't know, a lot of times when a stock goes up 240% in 2 months or 3 months, there can be a little sell-off. So I'm not talking about this. So I'm saying like, oh, everyone go out and buy this at $20. Because then if it goes down another 30% back down to like this level, you're going to be like, what the hell, Aaron? Why'd you tell me to buy this? If you told me you wanted to maybe buy it and hold it for 10 years, sure. XPEV to Rivian. Yeah, I think I like out of these kind of newer EV stocks, right? Your Fiskars, your XPEVs, your I'm not talking your Teslas, or anything like that. I like Rivian a lot out of them for different reasons. One of them because of how popular pickup trucks are in the United States, right? Like Fisker, I get their car, whatever, the Ocean, their SUV is cool. But here's my thing with something like that, with Fisker or Lucid Motors or someone who's coming out with just like a regular with an EV car, is you're not only going to have to compete with Tesla, you're going to have to compete with all of the legacy automakers. You're going to have to compete with Volkswagens and Audis and Mercedes and Toyotas and Lexuses. It's like people have brand loyalty to these car manufacturers already. What's going to make you think they're going to go out and buy a Lucid sedan or an XPEV sedan, which I think XPEV is a Chinese one, right? So maybe in China they're real popular. I don't know. I know in China, BYDDF, the Boyds are super popular, and that stock was ripping, actually coming off its highs right here. So Boyd could be interesting. But Rivian, I mean, of course, will have to compete with Ford and whatnot in terms of pickup trucks. But when you look at the most popular vehicles in the United States, like they're all pickup trucks. I like that Rivian's trying to like corner that market, and they're pretty freaking cool. Yeah, Jesse, I'm just going to pin this up here so people know. So people know I'm not your financial advisor. Yeah, exactly. I mean, I don't know. I mean, Ford, I don't know if Ford is still holding some of their investment in Rivian. That was like another reason why I liked it, was because Ford, who would know more than anyone who has potential to cut into their market share in terms of pickup trucks, saw Rivian as like we should invest in them. And we're in Detroit. Like, I'm pretty sure they're assembling the Rivians somewhere near me. I see a lot. I'm seeing a decent amount of them. Not just here. When I was back home in St. Louis, one of my family friends, they had a Rivian. They had just gotten it like a week before, and they said they loved it. So, I don't know. I mean, look, this is stock went public at the right time back in November 2020. This was actually like right when we were, I think maybe like the peak of the overall market, right? November 2021. This thing got up to just some crazy 180 on its debut, down all the way, got below $20, I believe, at one point. Yeah, 18, 16 bucks. So again, probably similar to Array, where it's been up a lot in the past couple months. So I wouldn't be surprised if it had some sort of drawdown, some sort of sell-off. But if you wanted to add some shares for the long term, go for it. MD, where are you at? Ford is selling, Rivian stocks not working together. Yeah, I mean, maybe the whole time it was just for a good investment and Ford made some money off of it. I know Amazon did. But I mean, at the end of the day, like, again, I don't know. Hell yeah. Damn, do we have a lot of Detroit area people in the chat? We should do a Benzinga live meetup one day for people in the area. Or even if you're in like Ohio or somewhere, you can come up to Detroit for the day. We can go axe throwing or something like that. Do something fun. Really? That's interesting. We gotta get Sandy Monroe back on the show. I want to talk to him about Rivian and kind of some of these other developments, because we haven't talked to Sandy in more than a year now. All right, guys. I do see our first guest hanging out in the background. That is my bad. I neglected to send him the links, but our first guest, Steve Kalasian, TradeEasy.com. Let's go ahead. Without further ado, roll that intro and get him on the show. What's up, Steve? How you doing?
Hey, Aaron. Wow, what a day today, brother. Holy cow. Unbelievable.
What have you been watching?
Well, I called it this morning. I said, normally I pray to the good Lord. I asked for a gap up, and we got it this morning, and we had nothing but monster sell divergences across the board. And we caught the sell divergences. I mean, Roku's down 5 off the highs. Tesla, I think, is down 20 off the highs. Apple, we had the monster sell divergences across the board. Microsoft, Apple, Amazon, Roku, Goldman, monster. Now I'm getting big sell reversals. We just caught a great short on the S&Ps at 35 on a sell divergence. We're starting to get sell reversals here. Then that, I think the highs are in for the day. We were so monsterly bearish coming in. We got that big gap up, and then we got caught a bunch of. I mean, Square was trading 90, 180, 92. It's down 5. I mean, the moves here, the moves to the downside are a lot faster than the moves to the upside. Yesterday, with the CPI number coming in a little bit better than expected, caught the shorts really by surprise. And I'll tell you, it was a monster short covering rally. And as I've been telling people for the longest time, and I'm going on my 40th year, that bear market rallies are more vicious than bull market rallies. I think the highs are in for the for the day. We had a big sell divergence on the daily charts on all the 4 indexes, and we're gonna get a pullback. We're down about 40 handles off the high in the S&P. The Nasdaq was 13,580, and we're down about 200 off the highs on that. So people are jumping up and down here. It's just unbelievable. What a morning.
Yeah, I mean, this morning, for most people, they're probably not saying that. Oh my God, what a morning! Because you basically were saying that we were looking for that gap up in the morning and then shorted it.
Oh, we had everybody. I mean, everybody in my live stream they're just jumping up and down. They saw it. They learned the strategies through me, and I mean, we had even Bitcoin, Ethereum sell divergences this morning. So I mean, and then we got some big plays here on the yens. So the dollar is really strong here right now. So we're we also do currencies: pound, Aussie dollar, Aussie yen, pound yen, dollar yen, and euro yen. So, but the market right now here, we just pushed down to new lows here. I mean, we caught a monster short just now in the S&Ps. Nvidia just dropped 2.5. Goldman dropped. Tesla dropped 5. I mean, these strategies that I teach everybody, these divergence strategies, and I always tell anybody, if you can master the art of divergences, you have mastered the art of trading. And it's just amazing, and I teach using the software, and you're coming in this morning on the daily charts. We were 180 handles away on the S&P futures from my moving average. Normally, anything north of 75, 80, you're in trouble. We were 100 handles higher. Now, do I think we're going straight down? No. The real question of the day is we have 4 gaps below the market. Well, we just filled the gap from today. So we have 4 gaps below the market, all the way down to 36.42. So in essence, we were up 600 handles off that low that we printed about a little over a month and 2 months ago. The real question is, are we going to make a double low, a double bottom, or are we going to make new lows for the year? And right now I'm 60-40. I think we're going to make a double bottom.
Yeah, so I'm curious, Steve, if today, right, you talked about how we got that gap up and then you went short. Was that because you already kind of had a bearish bias going into the day? Like, if we would have opened down 1%, would you have gone long? Or like, I'm curious
Yeah, so we came in based upon the strategies that I have on all my algorithms and everything on my software. I said to everybody yesterday, I said, I pray into the good Lord tonight that we gap up because it'll be Christmas in August. And everybody was agreeing. And, I prayed to the good Lord at least 7 times this year on these type of strategies, and they opened down, right? So today, the 7th day, he listened to me. The 7th time he listened to me. So basically, we got that big gap up. I mean, I was ridiculous. They were buying stocks like Roku, like it was getting taken over, like Square, like Apple, like Microsoft, Boeing's that. I mean, Goldman Sachs printing above the 359 level was just absolutely insane for what I was seeing. We just caught it short on Goldman just now. It just dropped $1.90. So again, right now, I think what you're seeing here, and then I got big buy reversals on the SQQQs, so they correlated. So Nasdaq just dropped about 60 on that last short. So, we were lucky enough to have that big gap up. A lot of our traders bought the SPXUs below 14 or down, and they're trading them now. And some of them are holding them for bigger moves. But these are great times. I love the volatility, and this is exactly what anybody who wants to, move the needle. These moves here are pretty vicious, up and or down.
Yeah, I mean, right now, I think you have a lot of people who, and I'll go back to the SPY here. I'm looking at the hourly chart here, but I'll go back to a daily. A lot of people who maybe haven't been participating in this rally that we've gotten since June. And I worry now that we're going to see, retail investors see that we're up 15, 20%, start buying, and then we're going to get that next leg down.
Well, look at that pattern you're showing right there. I wouldn't buy with your money with that pattern right there. Okay. You have a ton of overhead resistance, right? Going back to the left. And I think we're going right back down. Just because you had a 2/10 better than expected CPI number does not mean you're out of the woods here.
I mean, yeah, I hear you, and I get the point about having overhead resistance, but anytime you have a chart that's off its highs, you could say that, right? That there's overhead resistance, and typically
if you look to your left, every time we got pullbacks, you made higher lows back in November, December of the following year, and there was no overhead resistance. Now look at that. When you made the new high, when you made the new high and you broke and you rallied, every time you rallied, except one time you made a higher low, and then you just kept on just dropping. So, but if you look way back into 2020, 2021, when you exploded, there was really no overhead resistance because you were making new highs constantly.
Right. But I'm saying right here, for example, like, wouldn't this be overhead resistance?
Yeah.
That now that we've gone through it, right? So it's probably going to be a little bit of a choppier road up because, like you said, we're not making new all-time highs like we were in 2021 when we had nothing to the left stopping us. But my point was just essentially like anytime you're looking at a chart that's off its highs, you're going to have resistance, and a lot of times those charts break through those resistance, not cleanly, not on a straight line up, but eventually.
Well, like if you look back to August of last year or July of last year when you got that pullback per se, right? You didn't have this type of overhead resistance. Or if you look back to the September, October pullback of last year, you didn't have this type of overhead resistance, okay? If you draw your trend line from the peak all the way down, I think you pretty much, you're at the highs here. My target was 42.20 to 42.40. I probably would have extended it to maybe 42.80. Moving average to 200 comes in around the 4,300 level, and I didn't think there was any way in hell they were going to break through that.
Yeah, no, I hear you 100%. I've just been kind of more like, I don't know. I've been seeing it's a weird time, Steve, right now. I feel like people are real emotional with their takes right now. Like people on Twitter are getting real worked up about, yesterday, the inflation thing, saying people were mad at about the inflation number that the market was up. And I was sitting here like, what are we doing? Like, why,
well,
I don't
they could be mad all they want, and I teach everybody from day one, you trade what you see. Don't forget, we're trading intraday. I think there's so much money to be made intraday than buying and holding. And because it's proven by the returns that people are making with me each and every day, and whether you're a beginner, intermediate, or advanced trader, it doesn't make a difference. The volatility, and what's the hardest thing in the world is to call the market direction. And that's what we do here, right? Using the software I spent 9 years of my life building. But more or less, the point of the matter is, if you're going to start getting pissed off because an inflation number came in 2/10 better than expected, but yet rates are still relatively low comparison to inflation. So basically, the market's like the fact psychologically that the Federal Reserve, based upon the fact that inflation may be cooling off, you still have 8.5% CPI. That's monstrously high. Just because of one good number does not mean, or better than expected number, does not mean inflation's not here.
Yeah. I mean, yeah. And I mean, it's just like I feel like what's happening now, though, is people's almost like people that are bearish or the people who I'm talking about. And this may not even be that many people relative to like investors or traders out there. But this is what I saw somewhat on Twitter and Reddit and stuff yesterday, where people who are maybe like emotionally invested in thinking, and not just emotionally, like money wise, maybe they're short or whatever, but they're mad about the fact that like the market's up and inflation was lower. And it's like you said, at the end of the day, you can only trade what you see. And I don't know. I mean, to me, all the data we've been getting the past week or so has been pretty good.
I mean, I'm bearish. I'm not going to deny it. I'm not a raging bull. Not yet. I mean, is there going to be a time when I think the market, I'll be a bull again? I hope I'm alive, and I'll be 60. I hope sometime in my lifetime I'll see another bull market, but I'm bearish right now. I think that these markets that you're seeing, and even in bear markets, I'm bullish at times during the day where you'll capture a 20 handle move on the S&P, or we get buy reversals. Monday we had a big sell reversal, 11:45 on all the 4 ETFs. Tuesday was a trending day down. Yesterday was a buy reversal at 9:45, and we caught every long you can think of on pullbacks, right? We caught a beautiful pullback off the 15 at the 41.95, and then bam, they rallied to 42.13 on near the close yesterday. So these are great times if you ask me. And going into my 40th year, volatility I never shunned away from volatility. As someone who likes to intraday trade, you love volatility, and you educate people on how to trade volatility. You know what I'm saying?
Yeah, and I mean, Steve, just to be clear, like I like the fact that you're bearish, I'm bullish. We can respectfully disagree and talk about why. I think that's good. I don't think we don't have to all agree on everything. Sorry, I'm seeing someone saying my screen is blurry. Maybe check the quality on your YouTube, or if everyone else is having blurry screen issues, I can try to do some things on my end. But I hear you. So to your point, Steve, I do think right now with the fact that we've been up 20% in the last 2 months or so, I wouldn't be surprised to see a little pullback here. But I feel very, very convicted that we're not going to come close to touching these bottoms, because when we were at these bottoms in June, right? Inflation was out of control. You had China like completely shut down from COVID, and you had basically the market pricing in like a real recession. And then since then, we've gotten a lot of data that combats that recession narrative, and that's why you've seen the market come up 20%. Yeah, because here, people, here is where we thought recession's inevitable, right? 2 negatives, GDP growth, whatever. But then take example July. I mentioned this before you came on the show. We added 500,000 jobs in July, and prices did not increase one bit. So I don't know how you can take those two things together and say that this is a bad market or a bad economic environment. I'm not saying everything's daisies and roses and going to be great. Like I just said, I think we're going to see a little pullback here. It'll be a choppier road back up to all-time highs. Go ahead.
I'm 60-40 thinking that if we do get a push down, which I'm pretty confident that we will sometime, I think this year, if we do get that push down, it should be a double bottom. Now, I mean, do I think that the markets can go to 3,300 on the S&P? I don't think it's going to happen. I think if they get down to that 3640, 3660 level, it's a double bottom, and I think then you're off for the the fourth and first quarter of 2023. I think 2023 is going to be a tough year for the market.
Yeah, I mean, it definitely could be. I have no clue. Like you said, we can only trade what we see. And my point was for the past. I was pretty bearish down here too. My point was for the past month or so, past 5 weeks, data that I've been getting is like, oh, that's not conducive to the recession argument. Like I can't remember a recession in recent memory where we were adding jobs. And it's like, okay, maybe we got a little.
No, I hear you. I mean, everywhere I go, I see help wanted for hire. There's like what 8 million people looking for work, and there's 11 million jobs. So I heard like about a week ago. So I mean, I hear you on that point. But again, I think what's really, you also have to take into effect. And again, I'm not one of these guys that just jumps up and down like a baboon and says, well, household debt's through the roof, and we have a $34 trillion deficit, right? I've been around a long time, and markets have gone up based upon big deficits. What, 95 when Clinton was president, we had a surplus. I think that was the last time we ever had a surplus in the United States, right? So I'm not the type of guy to jump up and down like a baboon to say, oh, markets are going down, household debts through the roof, at record highs. We have staggering $34 trillion we owe. We only take in $4.5 trillion a year in tax revenue, but, I'm not one of those guys. I just think based upon technicals, we're going back down. Now, do we go back down and make a higher low, or do we go down and touch and make a double bottom, or that's it? That's what I'm thinking.
Yeah, no, and I love that. I mean, I think, Steve, like you said, like the main point, it's like when the Fed came out and said they have to be data dependent. Like we have to trade what we see, whether that's in the charts, whether that's in economic data we're seeing, whether it's data from certain companies. And like, I would just implore any traders out there to, sure, have conviction, do your
Yeah.
DD and make your calls, but don't get so married to some conviction that you're not going to change it if the numbers are changing and your thesis breaks down, right? Like I said, I was super bearish here, and I haven't been shorting every day since we've gone up 20% because I'm like, oh, maybe I was wrong to be short down here. Like, we'd already.
When you pointed to that lows, we were probably the most bullish I've ever been. Probably.
I remember that. I remember that too. So that's why it's funny to me. It's like, what's changed? You were so bullish down here, and to your point, the charts, like what you're seeing has changed. So I appreciate that.
Was the second most bullish time. I think I was bullish in 08. Like jumping up and down. Like I just wanted to put everything I owned into every stock or index. Back in March of 2020, when that was 18.5, I said buy everything. And then this time here, I did not think we were going to get we got to push up to 39.50, so we ran 300 points. That was pretty good on the S&P. But now, again, I think we're going to get a pullback. So we can make higher lows, or we're going to make a double bottom and fill those 4 gaps below. I think that is definitely going to happen before we can trend back up, really start trending up again.
Yeah. I mean, yeah. What would that look like to you? Really start trending up again? I mean, we're up 20% right now, or 15% on the SPY, 20% on the Qs. Would it just be clearing?
Right now, I have buys on my weekly and on my daily. So I think any pullbacks should be short-lived and make higher lows. Now we do start breaking that where I get a sell on the daily, but the weeklies turn bullish on my work. So again, I'm not bullish up at these levels. I'm saying I'm looking for pullbacks, okay, to warrant some oversold conditions, and then see if they keep down, up, like a ladder. But eventually, I think that double bottom could hold. Look, I was with a guy I traded with some 30 years ago. He could not stand when the market went up. He didn't care about technicals. He just hated if the market was up. He tried, why is the stock market up? I'm like, you got to trade what you see. I actually have a T-shirt that I have called "Trade 'em and Trade What You See," right? Because that's, to me, is the name of the game. You can't come into this game, right, with an opinion. You have to trade what you see. So if you're a doctor and you go see a doctor, like I did this morning, the doctor interviews you, and he's going to give you his analysis based upon what you're telling him. But when he gets an X-ray, he's not going to just disregard the X-ray or an MRI or a CAT scan. He's going to see what he sees in front of him to make a determination. So you got to trade what you see, and you really just can't trade based upon opinion.
Yeah, 100%. Like, and if that's what you're doing out there, just trading off an opinion, you're bound to lose.
Right. The game is the greatest game on outside of the game of baseball or sports, but I love this.
Yeah, 100.
People are really just resignating, to this.
I 100% agree. So let me just see if I understand. Let me go pull up the SPY back. Your kind of overall market sentiment right now. So you were saying, so we're in this uptrend right now. So you're saying on pullbacks, you might buy some, but then when we break the uptrend, you think we're coming back and testing these lows, potentially double bottom. Eventually
you're gonna get these 4 gaps filled below, and that could probably warrant a double bottom.
Okay.
Now I talk to some very smart people in the world, and they tell me that the lows are in for the year. I kind of, like I said, 65%. I'm kind of in agreement with them on that. But I think that there's a good, 40% chance that we'll test those lows again somehow. Remember, it's always something that nobody ever expects, right? And I'm going on 40 years, right? So it's always something that nobody ever expects I'm not saying short the market here now, right? Well, we did this morning, right? And we caught some monstrous moves here today. Monstrous moves off the high. I was shaking my head at some of these moves onto the upside this morning. I'm like saying, to stay with these shorts, they're going to drop hard. Roku's dropped almost $5.50 off the highs here. It's insane. Now I got sell reversals on these, and and the markets are starting to drop again here. So 41.60 down to 41.25. That's a 35 handle drop. Nasdaq dropping north of 200. These are violent moves, Aaron. You know.
Yeah, and I mean, I think a lot of those stocks, whether you're looking at Roku's, Netflix's, a lot of your, Kathy Wood, ARK stocks have just gotten, so pushed up over the past few weeks. We hear it all the time. Nothing can go straight up. So, we're seeing pullbacks in some of those names. I'm not surprised.
Mm-hmm. I mean, whether they pull back and set up nice longs on the daily. I mean, we had a beautiful, beautiful pattern on AMD about 3-4 weeks ago. Stock ran 20 points off the daily chart. Beautiful buy divergence on the daily, a bigger time frame. So, there's great opportunities each and every day.
Yeah. All right, Steve. Well, let's leave it for there today. I'm going to drop that link in the chat, tradeeasy.com. Check it out if you want to get more info from Steve. Join his group. But, Steve, always a pleasure to get you on, man.
Thanks,
great conversation.
Thanks, brother. Have a great day, everybody. Take care, Aaron.
You too. We'll see you next week. All right, y'all. That was Steve Kalasian, tradeeasy.com. All right, guys. I do see our next guest, Rob Roy, hanging out in the background. Honestly, I'm feeling we're feeling upbeat today. We're feeling very high tempo. So maybe we should just keep the show rolling. Let's go ahead and let's give Rob a sec, since we've got a couple minutes till 12:15, his slotted time. So let me know in the chat if you've got any tickers or anything you want to check out. Again, I've been mainly just watching the overall indices. Let me pull up our graphic from Twitter for which companies, and you can find this at our Benzinga Twitter account, which companies are reporting earnings this week. We talked about Rivian tonight, which may be exciting to some. I'm a shareholder, so I'm just going to hold my few shares of Rivian. And if they go down 20% tomorrow, oh well, I'm still going to hold them. If they go up, great. I'm not looking to really make any YOLO type trades. Here we go. All righty. So we are rounding out earnings season here. We are getting to the end, as you can see by, look at Wednesdays. Really not a lot of earnings there. But still got some ones this afternoon. Actually, I mean, literally, I think Rivian's the only one I care out of here. LegalZoom, if you, I don't even know, like, what is LegalZoom just telehealth but for lawyers? Are lawyers not allowed to use regular Zoom? They need to get their own Zoom? I don't know. I would think in 2022, right? If you need to do some tele-law, you can just call a lawyer and hop on a Zoom meeting. I don't know. Or maybe not. I have no clue. I don't know anything about LegalZoom, but it looks like Rivian's really the only one we care about today. Legal docs. All right, that makes a little bit more sense. Paralegal stuff, like it's not like DocuSign though, but maybe like helping lawyers with their like a software to help lawyers organizational shit. That makes sense. I get it now. Safeguard. I don't really know any of these other companies. Flowers Foods, Algonquin, ResMed. I've heard ResMed before. Safeguard. I don't know. Either way, kind of rounding out that earnings season. But let's go ahead and bring our next guest on. We've got Rob Roy from tradinglikeaboss.com. Without further ado, let's go ahead and give Rob our very special intro and bring him on the show. Mr. Roy, how you doing?
Hey, Aaron, I'm great. How about yourself?
Pretty good. Cannot complain.
There you go.
So what have you been watching?
So, a couple things. First off, just to give you a little help there, LegalZoom is actually for the consumer and or business owner to get legal help from an attorney on retainer, basically pretty quickly. I've used them
from experience, huh?
I do. I've used them.
I was kidding, but you actually do.
I do. No, I do. I've used them as a company lawyer in the past. Not for big stuff, but you got questions, they'll schedule an appointment with you and help you out.
Oh, so you were using it for business stuff, not to get you out of trouble?
Yeah, I mean, no, I would never do that. I would never do that. I'm going to the best lawyer money can buy if that's the case, if I'm in trouble. That's for sure.
All right. So yeah, I mean, honestly, I've been kind of just watching the indices today. You've got SPX pulled up.
Yep. So the S&P 500 made a nice gap up today, right? And it's pulled back a lot, but we're at lunchtime right now, so I'm not surprised. When we look at the daily chart of S&P 500, I talked about that 4181 ad nauseum, the fib line right here, which overlapped the 4277 Fibonacci level, and then of course the 4200 line. And when I said when we break out, we're going to break out with a vengeance, and we did yesterday. Gap up today, a little bit of pullback. I really am expecting a retest of at least the 4200, preferably down to the 4181 and a bounce. A great entry, then longer position SPY would be above that 4200 for me. That's what we're looking at to add to our portfolio now. We do own a good size of SPY in our retirement accounts, my wife and I. So we're looking to add to that again if we can get that kind of retrace and bounce. But we buy it multiple times. It's not a one shot. We got the best price. This is retirement money for us. So it's very much longer term.
All right, Rob, here, I'm going to slow you down for a second because I do see a great question in the chat. And I want to clarify just something real quick. So Alexis is asking, I'm new to trading, looking for some strong investments to start. So first, you know, what Rob is doing here and you know, typically what people are doing with charts are trading kind of more quickly. If you're just now getting into investing, you know, I would maybe, and I'm not a financial advisor, but maybe I wouldn't start with trading. Maybe I'd start with just buying some, you know, ETFs or whatnot for the long term, and really kind of acclimating yourself that way, and then getting more used to the markets and how they operate before you get to that point where you want to start trading. Rob, what do you think?
Yeah, I mean, trading is awesome, but you need to learn what to do, and that's where most individuals miss the point. Is they just jump in, no real experience. Someone told them they should buy something, and they go and buy this position, and then they're stuck saying, what do I do next? Now I own this. When do I get out? Do I sell it? Do I buy more? What's my next steps? And they made the decision without really being well informed, right? So you've got to be a little bit cautious there. I do agree. I am not an investor mentality person, except for retirement monies. So for me, I'm all about teaching someone how to trade so they learn how to do it on their own. You know, you're not relying on a broker or a financial advisor, because some of those are incentivized, not all, but are incentivized by you investing in the products that they want. And lo and behold, for many people, what you don't realize, I would guarantee, Aaron, that you've got a lot of people in here that have owned, whether it be Apple or IBM or whoever the stock is, forever, and have just been sitting on it and never collected a penny off of it, outside of dividends, of course. But your broker is renting your stock out week after week, month after month, and collecting a rental income. So there are great strategies that you need to learn how to trade. You can make the decision to invest, but investing is very long term and it takes a while to build. So I think that's great for retirement, but for cash flow, paying the bills, I think you want to learn how to trade, but I would not just jump in without having a good understanding of it first.
Yeah, I think that's very sound advice. So Rob, what about the, you know, past week or so been volatile, right? Last Friday, we got that non-farms payroll came in the morning, higher than expected. Of course, good news, right? For the economy, market's down, right?
Absolutely.
Which it makes sense, right? Because you're like, okay, the Fed sees wage growth and jobs adding. They're like, oh, we're more convicted to continue our 75 point basis hikes, and we can keep going with that. We need to slow this down. And then yesterday was obviously the complete opposite, where it's like, okay, inflation was lower than expected. Maybe the Fed doesn't have to do that. So how have you been trading this? What have you been up to?
Still very short term for most of our positions. I shared with you guys our open portfolio in our Power Option Plays program last week. We had Google and Netflix open. You can see where we are so far. We made our first exit on both of them on the 8th, which was, sorry, not on the 8th. On the 8th, right? Which was on Monday. So we took our first exits there. We were up okay on Google, really nice on Netflix. And then we did a day trade on W Day. They've got earnings coming up, I want to say the 25th. Yeah, 25th. they've got earnings coming up. So, but that was kind of a wash, kind of flat. This was our Thursday, Friday trades from last week in this group, for this group of students. So overall, we're up about $4,000 on these contracts. So very much though, Google and Netflix were our first foray into the swing trades again. A lot of our trades have been day, very few swing trades, because I'm not comfortable holding overnight right now. I'm not. Google, I trade all the time when it was much higher priced. Netflix, I'm addicted to as a trader. That is my go-to. Netflix, Nvidia, those are some of my go-tos every single day. Google and Amazon, you got to get a new feel for them now. They've changed flavor a little bit, right? With the new pricing structure. There's a lot of newer traders in there now that were not there before. And when I say newer traders, think of the brand new person that we're talking about that just throws some money at the market and says, I'm going to buy some Google, which if they did was a home run for them, right? They're doing awesome today, right? How much of that was luck versus skill versus you knew it was going to go up at some point. But caution for me right now, Aaron, of it's as short a time as possible, which is today, trying to get in and out of my trades where I can. I mean, we did five trades today. 4 of them were day trades. 1 of them is an iron condor on the run.
Got it. Yeah. And so, I mean, like you said, right now, it's kind of been that market where if you're nimble, if you're doing a lot of quick trades in and out on a day-to-day basis, you have a lot of volatility, a lot of alpha out there. And then, if you're buying and holding, though, you're kind of more at the, just risk of, I don't know, whatever's going to happen with the market, right? If you're just a buy and hold investor, you've had a great last 8 weeks, right? Since the bottom in June, we've gone up on the Qs 20%, SPY 15%. What would get you to the point where you're out of that mindset where you will need to be so short term in and out on a day-to-day basis, and maybe you start feeling like, okay, I can hold some of these bullish trades overnight, or maybe put on some of these 2-week long swing trades? What would get you to that point?
So what we're looking at here back on S&P 500 was there's a lot of confluence here, folks. And for those, if you're not familiar with the phraseology in the market, it's when things are happening, converging all in one area, one spot, right? So we've got the Fibonacci level, which is the 100% line, which comes off of this big white candle where the Fib pattern started. We've got the 4,200 level. We use 100-point levels on all stocks that are, how do I want to say this? The easy way to say it is that we use them on almost all stocks. Very large companies like Google, before they're split, we did not use 100-point levels on because you'd run into them. We've got some rules for it. One day we maybe go over those. And then you've got this 4181, which is a major Fibonacci level and a Fibonacci number series. I was, as I said before, I've said it out there 100 times now, as I'm watching, one of the financial news networks, and they say, oh, right around that 4175.80 level is the key level to break through. You don't know why, but they know it's there, and that's where most traders are. They see something there, they just don't know why. That 4181 is that key level, exactly, to the penny, that key level. So, Aaron, for me, I'm really looking for, ideally, a retest of the 4200, preferably a little bit lower, a break above the 4200. All my moving averages are in the right order. 8 is on top, pink line. Green is in the middle, the 21, and brown is on the bottom, the 55. So all of the moving averages are in the right order right now. I've got everything that I need, ideally, to identify a market shift. And if we break the 4181 level, we'll make a new decision of do we want to stay here or not. But right now, that's the key factor that we're looking at Wealth Builders HQ to try to identify where our entry points are going to be.
Love it. Well, Rob, unfortunately today we running a little bit out of time, but if you've got anything else to share with us today, I did drop that link in the chat. I'll drop it again, tradinglikeaboss.com. Let me know.
Okay. Well, I mean, we did a couple of trades. You tell me, is there a chart you want me to look at? I mean, we did a credit spread on Disney with their gap up today. We picked up about 25 cents.
Let's do this. How about last thing we'll do? Why don't you go over your best or favorite trade over the last week?
So last
or maybe
week,
it was from today. I don't know.
It wouldn't be from today, but this is this month. So I guess our SPY trade right here on August 3rd brought us in about $3,500. It was a day trade. We were not in it that long, but we got in on the stock about 411. We got out about 415 and a half, right? And this is the strategies that we teach, folks. And this is what we do. This is what we trade day in and day out. And it all depends what you're looking for. I mean, I've got a spreadsheet here that I'll show you real quick. Different spreadsheet. On our rut trade today. I mean, we have somewhere between a 6 and 7% chance of being wrong on this trade. That's it. That's it.
And I love on that spreadsheet that you have how open it is. Like you've got days where the P&L is negative. Like a lot of people out there posting their stuff out there they've got Bernie Madoff returns, right? They've never posted a day where they've lost money, but seeing, your trades where you show me the ones right here. I'll zoom in on here, right on the right side. You can see, some days $6,000 up, one day down 2,500, right? I like that, putting the honest.
Sorry, I didn't mean to cut you off.
I was just gonna say, being like honest with the returns gives you a lot more credibility to me than someone who said, was only posting their 300% option winners, and never posting their losses
from their laptop in their Lamborghini.
Yeah, exactly. Right. Or off their iPhone.
These I haven't updated the ones down here in white. I haven't finalized them yet, but you can see here green, red. It's very simple. If they were blue, they would be a break-even trade, right? Like this one right here. They'd be a break even. But every trade here, loser. I mean, it's not that we don't get them. We do. The key, what we teach at Wealth Builders, one of the main things is minimize your risk and maximize your run. That's
going for singles. All right, Rob. Well, always a pleasure to get you on, man. I've got that link in the chat, tradinglikeaboss.com. Until next week, any fun weekend plans or anything?
Yeah, we're preparing for my daughter's engagement party. So that's what this
Oh my God. Same daughter that just graduated?
No, thank goodness no.
Oh my.
Nope. Different one, but we've got, 60 or 70 people now scheduled at our house for an engagement party. So we are going to be running like crazy.
Well, wow, congratulations. That'll be a lot of fun.
Thanks.
All right, Rob, have a great rest of your Thursday.
You too. Take care.
All right, y'all. That was Rob Roy. Hit up tradinglikeaboss.com to learn more from him. Drop any tickers or any trades you're looking at in the chat. Coming up next on Benzinga Live, we have a very special in-person guest, Mr. Hot Stocks Luke himself. Full disclosure, Luke came in hot. He's got something he wants to discuss. Maybe it's a stock. Maybe it's a crypto coin. I have no clue. I'm just as excited as you guys are to learn what Luke has for us today. So I think without further ado, I get a thumbs up from the right side. Yep, he's ready to go. Let's go ahead and give Luke our very special intro. Get him on the show.
All right, here we go. Aaron, but actually I do need help putting on my headset because I'm only one-armed. Can you pull the other
You don't
side?
need the headset.
Can you pull the other side of my ear, please?
All right, that'll be another
There we go.
little bonus on my paycheck, I hope.
All right, now we're ready to rock it. It's a Luke and Aaron Bree show, my favorite time of the week. Let's get some symbols out of the chat, and let's talk fundamentals on some of these symbols.
All right.
While we're waiting for those to come in, first things first, what stock has been amazingly resilient this week? It's
Netflix.
a question for the group. I'm actually now at break even on both Netflix and Facebook positions.
Woo!
Yep.
Let's go.
Yes, sir.
Luke,
I've been talking those for a minute.
Luke was...
I called Facebook the biggest wealth transfer of our lifetime. Buying Facebook. It was a little bit extreme.
outlandish.
I might have overdone it a little bit, but that is what I called it. I'm back to break even on the position. Still feel good about the position. That said, what stock, and let's look at the chat, has been amazingly resilient this week? Too resilient, I would say.
Here, let me go ahead.
All right, so we got LAB. Which one is that?
That's
Standard BioTools. Okay, I don't know that one. Etsy, Apple, Meta, Space, Enphase, AMC. There are some good answers in there.
What about
AMC being maybe the best? I don't know.
Yeah. No, Coinbase hasn't been resilient this week. What was
All right, ready?
Yep.
DWAC. All right,
DWAC.
number one story in the nation is the FBI raid on Mar-a-Lago, right? I mean, turn on any news channel, and it's going to come up. Go to CNN, go to New York Times, go to probably even to Fox, and they're going to have a different angle on it than the first two. But it's the number one news story of the week. This stock has held up amazingly well. So what is this? Is this a 1 year chart with daily candles that we're looking at?
Correct. About 1 year. We can go more. We can go less.
No, that's fine. That's fine. But go ahead and give us a zoom. Let's look at the last couple. Yeah, plead the fifth. Exactly.
What was this?
DWAC. See, okay, everybody's on the same train as me. What was the news that happened there? I think that was Musk Twitter. I'm almost certain.
June 14th. No, that was the deal first being announced. No, I think this was some problem with deal, like someone left or something, or some investigation.
Let me take a look. I'm looking right now.
June 14th. Here we can go. I'll go with my Benzinga Pro. We'll go
that's what I'm doing. All right. Here's why. It happened Monday night.
Yeah.
You're
SEC
right.
woes hit Trump.
SEC subpoena.
Yeah. So I mean, to me, there's like I haven't seen.
Dude, the stock is still trading 3 times $10. Come on now.
Are you? I'm so confused. Are you saying this is because it's been so resilient, it's a buying opportunity? Or are you saying this is it has no business being up here and it's a short?
I think it's a short.
I think so too. I was worried you were trying to go long.
So Zen Bullish is saying that it's a bear trap, which it could be, which is why I would not short the stock outright. I would buy long dated puts on the stock. I haven't actually looked at them. I figure let's do a little bit of exploration together on the show. But like here's the thesis. Okay, you still have the stock trading at 3 times what the SPAC was trading at. That's significant, 1. 2, there's a very decent chance that this deal does not happen. The shareholder vote to extend the timeline, not to approve the deal, to extend the timeline for the deal to happen is in September. Okay? And here's the deal. A lot of retail ownership in this. The timeline needs to be extended. Are people not going to vote? Right? Well, think about this. If you own 10 shares of DWAC or 10 shares of any other stock, do you vote on executive compensation and shit like that? No, I do not. Right? I don't. Do you, Aaron Bree?
Do I vote on?
Do you vote your stock? No. With it being so widely retail held, that's a problem. So you have the vote to extend the timeline in September, which could be a trip up. Plus, then you have to actually get the deal done, and the valuation is already high. I think even with that deal getting done. So that's my bear thesis. I think the stock has held up too well this week amid the news that's happened. The Mar-a-Lago raid. Do I think this has any sort of long-term impact on Trump, on truth? No, I don't think so. I don't think really any of us do. I mean, does it even impact Trump's electability in the next election? No, I don't think so. Open for debate there. But why don't you go ahead and pull up the options chain on this?
All right, I will. All right, fine, I'll do that first.
What did you want to do?
I was going to say, well, so first of all, I'd be kind of scared to short DWAC here, but it has nothing to do with the company. And it's just because right now, in the past couple weeks, we've seen a couple of these, NVTAs, GameStops, AMCs, up 10, 20, 30%, which is just showing me we're in a market environment where you can have some of these names running for seemingly no reason. And I wouldn't want to be caught in one. I guess if I bought some cheap puts and then the stock went up 20%, it wouldn't really matter. I'd be out on the.
That's what I'm saying. It's I would not short a stock like this. No way. Right, because this stock could absolutely run from 30 to 60 in 2 days. No doubt in my mind that can happen. We've seen it happen with this stock.
Yeah. But, okay, so the other... Why I also wouldn't go long DWAC here, we have to keep in mind, True Social, someone in the chat said, Trump isn't even using it. True Social's been active. It's been, operable. But I haven't heard one thing about people using it. I haven't heard one thing.
No, Trump's put out a couple of things on
but have they put out any press releases saying, hey, we had 2 million active users last month?
Okay, no, that's a good question. Let's look. That is a really good question.
And I would try to go to their website to find their press releases. Look at this. Google True Social, pops up. No information is available for this page. Learn why. They don't even know how to put their SEO shit on Google. The website's fine. It looks like they just used a template off of
Yeah,
Wix
website's
or
fine.
something.
It doesn't matter.
Yeah, it doesn't matter. But I just don't. I mean,
No, it doesn't look like we've gotten any numbers. They did put out a press release previewing that Truth Social is going to be available on Android. Okay, so it's ordered for pre-order on Android. No numbers in there, no date of launch. It's a great point.
I mean, even like Gab and Parler, I feel like I heard more about people.
Yeah, think about
those.
this, guys. Right, and keep in mind that, like, I'm a stock news guy. Right, I've been working at Benzinga for 10 years. Like, stock news is my world. Whenever a company has something good to flaunt, they flaunt it.
And if
they put out the numbers.
And if you
they don't hold back.
If you opened your app for use 3-4 months ago, whatever it was, and you haven't put any news out, you hear the phrase "no news is good news." I wouldn't say in that case that's the case, right? I'd say if they had some like blowout numbers, 10 million people for the first day, we had 1 million posts on True Social, like they'd be posting that stuff. I would want to, and then some other people talking about it. I saw even people on Twitter and stuff being like, like Gab, or the thing that didn't work about Gab and Parler was like you didn't have the conflict, right? On Twitter, like it's interesting, right? Because you have people on the right and people on the left battling with people, and the people on the left want to, like make fun of the people on the right, and the people on the right want to own the libs. And it's like you can't do that on Truth Social. It's just all the same thing. So it's I think that's what's held back some of these other platforms that have been similar in the past, whether you're talking about Gab or whether you're talking about Parler. But all right, Luke, let's check out the option chain.
Yeah, let's get a look at the options pricing.
Also, do you know what Marjorie Taylor Greene's average price on this is?
No.
It's somewhere, I believe, between $110 and like $80.
That she bought the
DWAC.
stock?
Yeah, DWAC at.
Holy shit.
All right, how far out do we want to
go? Take me to January, please.
We are going to January 20th, 2023. So this gives us about what? 3? Wow, we're only 4 months away from January.
I know, man.
That's crazy.
A little more than that.
No, 4 months. Oh yeah,
September,
you're right. You're
October,
right.
November,
December.
December.
I can't do math. I can't do math.
Plus you got half.
5.
Yeah, really 5 until
5
these
months.
options are going to expire.
5 months.
All right. All right, let's take a look. I mean, I can't see. It's like zoomed in for ants.
Oh, sorry. All right. So share price, or what do we want? So strike price. We're currently trading at 30.24. So say we want to go down to
start with 25s.
8.30. Those are expensive, man.
All right. So 25s are 8.30. So then the stock needs to get to 17. That's a big drop. What about the 20s?
Technically.
680. Wait, the 20s are what?
No, sorry. I was saying 1680 is the technical break-even price.
Okay.
But yes.
Oh, it calculates it for you?
Yeah.
That's nice.
Robinhood. Yeah. Pretty cool.
All right. So then give me the 20s.
Oh, do you want to see the other coolest feature that I like about the option chain on Robinhood? 20's $5, 500. Break even 15.25.
That is tough.
I mean, I think this thing's back at $10 by January, or 15
tough,
maybe.
though, man.
I'm not saying because there's so much premium baked into this. Like these are expensive.
All right, so let's throw this one out to the group. If you had to make a trade on DWAC, I'm not going to make one based on how expensive these options are, which is sort of what we all expected would be the case. But if you had to make a trade on DWAC, your break-even price on the downside is 15. Would you make the trade or not? Yes, if you would make the trade, you expect the stock below 15 by January. 2, no, you're sitting on the sidelines like me. And Jay Rice is suggesting selling call spreads, which is not a horrible solution.
Yeah, and that's what I was getting ready to do here. I was seeing because you can kind of offset some of your costs on expensive contracts by doing spreads, but because these are so wide, and this is what I was going to say. The other coolest feature about the Robinhood options chain is you can. Right now, I have a put debit spread. I'm buying the 31. I'm selling the 25 one, so it would cost me $4.55 to put the trade on. And what Robinhood does here, which I think is really cool, is it shows you exactly your return at where the price would be at expiration. So we would have to get to $25.82, and then for a $455 trade, that's how much it would cost, or $4.18. What was it? $4.55. The most I could make is $82. So this is a really bad spread. Like there's not enough risk reward there for me to put that spread on. So maybe in Jay's suggestion, maybe it makes more sense to put out like a bearish call spread. Like if we did a 50 and we sold this Right. Oh, see, but then we're setting ourselves up for a potential $867 loss just to make 133 bucks. I'm not seeing anything I like.
There's not a trade.
Yeah.
I don't think.
What a few months ago when DWAC was
And that's a great point, not going under 10. I think it's most likely that the deal doesn't get done.
Oh, 100%. But
it's a really expensive bet to place.
Yeah, I just don't think the risk reward is there.
That's what
we
I'm
talked
saying.
about what's his Enrique Atela or something came on the show like 6 months ago when DWAC was at like 90, and we were talking about how to trade it. This was like back here in like March, and he was basically like the only way I would trade this is some super out of the money, super long dated puts, because his point was with a stock like this, you could see it, and we did end up seeing it with like that SEC probe or whatever. It dropped 30% in a day, whatever. So he's like, I'm not going to bet on this thing to go down in the short term, but if I buy some long dated puts and the stock drops a bunch in one day and the VIX shoots up, whatever, then that's good.
All right, next stock.
Before we get to the next stock, I was going to ask you a quick question.
Yep, hit me.
What do you think inflation was in July?
0.
That's very controversial of you.
I saw the news clip.
Did you see
Yeah.
everyone talking about this?
Yeah. I get where he's coming from with the 0%.
He did clarify in July. He said in July there was 0 inflation.
Yeah, I know. I got it. Yes. And the PPI number was great too.
Yeah, down 0.5%, the first decrease in 2 years on the wholesale inflation index. So, I mean, look, for July, prices didn't go up, and we added jobs.
Yep.
All right, any tickers from the chat, or what is your next one?
Can we hit Celsius?
Sure.
And yeah, feel free to drop tickers into the chat.
CELH.
All right. I don't know if you have an air horn or not. Stock that I called on this show a couple times.
Very nice.
Been long it for a minute. Nope, the first one was right. Been long it for a minute. Thank you, sir. All right, average price $73.39. Stock is trading at 104 right now, up 42%.
Whoa, wait, when did this thing get back to all-time highs?
Bro,
I didn't even know.
I just pick hot stocks. I'm sorry.
I had no clue. Like, if you would
when they tripled sales over the past year, last quarter.
Yeah, Jonah's probably retired right now.
Yeah. Yes.
If you would have had me guess, like, where do I think Celsius' stock is off its all-time
What
highs?
did you say, like 36?
Down 36%.
No, like $36.
Oh, no, I would have guessed that it was probably down like 30% from its highs, I think. So from
Okay.
100 from its highs, I would have guessed it was like down here at like 7. I just had no clue this thing's been on this ride. But
Yeah, baby.
I overlooked
We've been
this.
hot. So there's two news catalysts. That big gap that you see, that's Pepsi invested $550 million into the company to put up strong earnings. They showed $133 million versus I believe it was around $50 million in the same quarter of the previous year. So let's go ahead and talk about how I want to handle this position right now. It's a decent sized single stock position for me, which means that it's 1% of my whole portfolio. Okay, which sounds like a little bit, but about 70% of my whole portfolio are the big ETFs. So we can talk about the ETF portfolio structure in a little bit here. And this is, Celsius, the drink company, not Celsius, the crypto company. I've had to clarify that like 6 times in the past week. Don't worry, not bankrupt. So the stock makes up a very good chunk of my single stock picking portfolio. Again, like I said, up 42%. So here's what I'm looking at. Can you whip out a calculator? We can do a little bit of math live, or does that not work like that?
You mean like pull the calculator up on here?
Yeah.
Yeah, let's do it.
I don't know how advanced you are. Alrighty.
Do we need like a graphic calculator? How
No, we're simple folk.
full screen calculator? All right, let's do simple folk.
All right, simple folk. So the company, first number I want you to put in is they have an enterprise value. That's like the holy grail for us looking at this from a fundamental perspective of $7.7 billion. All right, keep going.
Oh,
One
no.
more.
Oh, no.
Nope, go back. Wrong calculator.
Calculator.net. They got to be able to go to a billion, right? Wait, no. All right. 7 point. No, we don't need to do a point.
Just do the Google calculator. It's so big. I can't see, man. If y'all think I'm squinting because I'm tired, I just can't see. I guess I should get glasses.
They don't have commas, and I don't know. All right, 3, that's 77 million. That's 770 million. That's 7.7 billion.
All right, there we go. All right, now we want to take. So what we're trying to get to is we're trying to get to the EV to sales ratio, right? A much better ratio for us to look at when we're evaluating companies is EV to EBITDA. The reason why that's better is because it gets you further down the P&L, and you get to look at expenses, right? How efficient is the company at generating cash flow? There's really not any EBITDA here, right? The company is not wildly profitable. It's not cash flowing from operations. So we have to look at it on a sales basis. So go ahead and divide that 7.7 billion, and I'll do this math for you on the side.
Divide it by what?
532 million. So no, oh my God. Oh, I thought you added. Okay, never mind.
You can't see.
I can't see. Fucking blind.
I will say I don't know. So 500. All right, that's 532,000.
1, 2, 3. 2.
One more.
3.
Wait. No, because that's.
All right, you look. Your eyes are better than mine.
All right, wait. Here.
But here's how we're getting the 532 million. So sales in the most recent quarter were 133 million. We want to annualize that. So take 133 million times 4 because that's 532 million per year sales run rate. And go ahead and give me an equal. Okay. All right, the answer is 14.47.
Wait,
you missed a 0 on the.
I missed a 0. Let's redo it.
All right. 7.7 billion. Okay, 77. Okay.
They make it so hard without the commas.
Let me help you.
So there are 9 zeros in a billion, right? So 7 billion, but since you've got the other 7s, we need
8 zeros.
8 zeros. 1, 2, 3, 4, 5, 6, 7, 8. Divided by 532, right?
532. Yep.
And now we need.
And go 0, 0, 0.
That's 532,000.
0, 0, 0.
That's 532 million.
Equals.
14.
All right, 14 and a half. Let's call it. Okay. So that's what our EV to sales ratio is in this stock. S&P 500 average is somewhere between 2.5 and 3. Okay. So let's say that we want this stock over the course of the next 2 years to get to an EV to sales ratio of about 4. It's over the next 2 years. And so here's the question that we have. If we take that 14.5, we divide it by 4, that gives us how much we need sales to increase. So we need sales to go up by 3.6 times. Does that make sense, AB?
Kind of.
I'm
kind of lost.
If sales triple over the course of the next 2 years, the stock's at a fair valuation. It's still trading about 50% more expensive than the S&P 500, which is material, but it's absolutely a growth stock. But again, you need sales to triple over the course of the next 3 years. So that would bring their quarterly sales from 133 million to 500 million. That's the question. Can it do that?
Can I slow you down for 1 second?
And my gut check is no.
Can I slow you down for 1 second? Because I think I was too focused on the zeros, and I may have overlooked something. So we took the 7.7 billion. That's Celsius's enterprise value.
Yeah.
And then we took the 532 million. That's revenue from what number was that?
So their most recent quarter revenue was 133 million. We want to annualize that, so we took 133 million times 4.
Okay, so we took a yearly revenue.
Yep, the current run rate.
Okay, so basically just by dividing if we do this 7, is that right? We need calculate. Can Google put some commas in their calculator? Oh, but anyway, so you divide the 7.7.
Do 7.7 divided by 0.53.
Oh God, you're so smart, Luke.
Yeah, and that works the same.
7.7
divided by
0.53.
Yep. Then everything's in billions.
Right. So this number right here is basically telling us we would need to run that same revenue for 14 and a half years to get to that enterprise value.
Different type of thinking, okay?
Okay.
Stocks trading at 14.5 times EV to sales. S&P 500 average is 2.6.
So it's expensive.
really expensive.
Yeah, like 7 times.
It is a growth stock, right? They more than doubled revenue on a year-over-year basis. The question is, over the course of the next 2 years, that's, I think, just about as far as we can get away with calling this thing a growth stock and justifying a higher valuation. Can sales go up by 3.5 times?
And then how did we get to that? We divided by 4. How come?
If the stock's trading at 4 times EV to sales, it's fine. There's no valuation concern. S&P 500 average is 2.6. If it's trading at 4, it's still got a growth story, then that's fine.
Especially as a growth stock, correct. So do you remember last year when we were talking about Celsius, probably while it was near its highs, and I'll pull the chart back up. Do you remember what one of the...
TikTok.
Exactly. So that, I think TikTok and social media, and I'm not saying Celsius was a fad, but it getting really popular on social media helped the company tremendously, because it's like almost free marketing, right? Like it got very... I'm just like, how do you get more growth than going viral on Twitter? That's already the biggest thing you can do right now is go viral on Twitter.
And here's the thing, is that a lot of the social media sentiment is turned on it as well.
In terms of the drink or the stock?
The drink, not
really?
the stock.
Why?
Mm-hmm.
That's way more concerning than the social media turning on the stock.
That's what I'm saying, man. I thought sales were maybe going to be down this quarter. I don't know how much longer this shit can last. They do have new sales channels developing. But again, can they... The question is, let's just make it really simple. 133 million a quarter of sales now. Can they take that to 500 million a quarter over the course of the next 2 years?
I don't think they're going to be able to grow that quarter by 3 times in the foreseeable future.
I don't think so either.
I could be wrong. I mean, people probably said...
I think it's really tough, and I think it's a tall order.
People probably said that about Monster Energy, like at certain points too, in its history, and that chart is one of the best stock charts of all time. Do you know anything more about why people have maybe started to turn on Celsius? I always
liver damage.
Okay, oh my God, I can find a text.
And here's the thing: Monster Beverage, very, very global, diversified product offering, does 1.5 billion a quarter of sales, and they've been doing it for a long time. They were at 500 million literally a decade ago, 10 years ago.
I'm trying to find in my text, because a couple months ago I was texting a friend about different energy drinks, and she was saying that she loves Celsius.
I knew it was going to be a female friend. I knew it.
Well, I don't text a lot of my guy friends like that, you know what I'm saying? Oh, yeah. I texted Luke yesterday, he didn't respond. But anyway, so she's texting me about how she loves Celsius. It's like so healthy, and I basically said something along the lines of like, yeah, like that's like their marketing, like telling you it's like super, like it's an energy. Like I'm sure it's not that healthy. I'm sure it's healthier than Red Bull.
Yeah,
you know, whatever. But it's that doesn't shock me to hear that it's.
Yeah, I mean, so here's the issue that they're up against. Is basically they took energy drinks to a non-energy drink crowd, right? By having a different sales angle, a more natural, etc. sales angle. They're drinking several of these drinks a day, and they're getting the side effects that come with all energy drinks. That's the issue that they're up against.
Yeah.
So here's where my thinking's at as a shareholder. And again, this is one of my largest things. This is my 3rd largest single stock position right now. The first being Facebook, Meta, second being Netflix. Zoom in more. Let's make those highs, and keep in mind I can't see. All right.
We're right there.
Look at those highs, man.
We reached high. Oh, I mean, it hit perfectly. 110. It hit perfectly 110 both times. Rejected, came down. We're trading at 103 right now. Luke,
so you have all the way back in the end of 2021, you've got a 110 high. And then within the past week, you have 2 110 highs. So my play on this stock as a shareholder is I'm going to dump half now. I'm up about 42%. If we get rejected again at 110, I'm going to sell the rest of it. If we break out above 110, I'm going to let the breakout ride. Opinion on that?
I like it. What would you say your average cost was? 70?
73.
73. And you bought this like about a year ago?
Yep.
Probably back here in December, maybe? Or maybe more back here?
Yeah, right now.
Oh, okay. So literally a year ago. Like maybe even August 11th.
Probably right around there.
I mean, Luke, you're still up 30% in a year on a trade. Mm-hmm. I'd take some profits.
40%.
Maybe.
Yeah. I'm gonna dump half now. If we get rejected at 110 again, I'm gonna sell the rest of the position. We break out above 110, I'm gonna let the momentum ride.
Yeah. That's interesting. Where did you see this? Where people were talking about the liver damage? You see like TikToks on it?
Yeah.
Okay.
Tons.
Really? Celsius. I'm gonna search just Celsius
Yeah,
drink.
just
on
Google
Twitter
that.
and-
I don't know. Go on Google. Let's search Celsius drink.
But I don't know if you remember this, but Nigerian, I always forget which one, was on our show like more than a year ago talking about Celsius, and that was a point I brought up. Was like, don't you think? You know, right now it's marketing themselves as the healthy alternative. Don't you think, Red Bull, Monster's gonna, also put out a healthier...
and there's been tons of others have entered.
Right, put out a healthier energy drink, and it's like that growth gets harder to sustain as you get more competition. So Celsius has had great growth. Now you need to see that growth increase to 3.5 times what they've already done with increasing competition, with problems that they're talking about on TikTok, which was its like main thing. I don't see how.
Jay Rice makes a great point too. Sell next week's $110 calls for $2.25.
Yeah, it's a free $225.
That's not bad. It's a free $225.
Well, but if you're still holding the stock and then it goes down.
Yeah, but maybe I do that for the half of the position that I want to hold right now, or I
Love
want to
it.
dump right now.
Love it.
Yeah, I do too.
All
right. Any final words of wisdom? Maybe I got a 1 o'clock call. I gotta hop on.
Yeah, that's what time we wrap the show now. 12:58. It is time to wrap up. If we've got any other tickers or anything in the chat, I guess we could do a quick 10 seconds on them. But no, I think that's.
Or maybe we can get a guest appearance from Bill Haddad.
Well, if you don't want to come on, what's the biggest headline of the day so far? Biggest headline from when the market opened. 9:30 on. Okay. All right, give Bill a second. We are going to give you the top headline of the day. I don't know if we've had any like big news today.
No, there hasn't been anything. Yeah, there's been nothing.
All right.
Yeah.
Tesla. Nicholas Brown is saying Tesla. What happened with Tesla, Bill?
The other one that I'll pull out is Bitcoin intraday high and getting rejected off of it. An intraday high, what I mean by that is it's the highest that it's been since June.
Nicholas Brown, news by Nick on Twitter, saying lawmakers trying to gain info on Tesla. I don't know what that means or if that's significant or not.
Okay.
All right, guys, that'll be a wrap for the show today. Please smash the like and subscribe to the channel if you have not already. We will be back tomorrow. Hey, AT, what's the all access schedule like tomorrow?
11:20.
Okay, so we'll be starting a little late tomorrow. We might do the same thing we did last week where we combine the...
We start at 11,
interviews at 11:20. We'll combine show. We'll just hang out here. Hang out on the Benzinga channel as always. Happy Thursday, everyone. Stay tuned for Money Mitch. He's got a busy show coming up. He's got some good interviews. Let's see who he's got today. He's got Chris DeMuth, the hedge fund manager at Rangeley Capital.
Oh, we have a huge interview coming up today.
And then I was getting to it. And then we've got Qualcomm CFO. Coming on at 1:30. So if you're into Qualcomm, ticker QCOM, make sure you hang out with us at 1:30. This stream will automatically redirect you. You don't need to go anywhere until tomorrow. Love you guys.
All right.